Let's dig a little further into the tariffs' potential impact on the economy. That strong services data this morning shows things are still humming along, a little too hot for John's liking. The December number saw the sharpest output growth and new orders since March of 2022, while employment increased for the first time in 5 months. Would universal tariffs, if we get them, the expiration of the tax cut, slow things down? Joining me now to discuss that, JPMorgan chief U.S. economist Michael Feroli and our own Steve Leisman. Gentlemen, welcome. Steve, you want to pick up here on what we were just saying? And look, the data continues to be strong.
Yeah, you know, I just got back from the American Economic Association annual conference in San Francisco, and there were, three kind of camps out there. One was, if all these policies go through, it'll be a disaster. On the other side, some people were very upbeat about the policies. Then there was this sort of large group in the middle that says, you know what, they're not going to do a whole lot of what they say they were going to do on the campaign, so things won't change that much. Interesting to me when I landed, there's that Washington Post story that says, well, they're kind of backing off the tariff thing. That went with that whole, group in the middle that were like, it's not going to be that big of a deal. So we'll have to see. And then, obviously President Trump comes out and says that's not a true story. So it's really hard to know. It raises that uncertainty. I'll talk more about this on the other side of what Michael says. But my big concern here is that President Trump is coming to the in the fire trucks, coming with a hook and ladder to put out something that's not really on fire when it comes to the U.S. economy.
Mike, I can't. You must just want to wade right into that. Tell it. What do you think we're setting up for this year?
Well, so first of all, I agree with Steve. The economy is, not on fire. We see that in the data over the past couple of weeks has all been quite favorable, even with inflation coming in a little lower. In terms of, policies, yeah, tons of uncertainty. I kind of tend to fall into that middle camp that Steve talked about, not because I don't believe the administration won't follow through on a lot of their policies, but I believe that, the business cycle has its own rhythm here, if you will, and that some of these things are, a lot of the economy is not determined in Washington. And so I think some of the trends we've been seeing at the end of this year should continue into next year. I would say of the things we're looking at, tariffs, we were reminded of it again this morning, is a big issue that I think is probably going to be front and center for the year. We think it probably will be a bit inflationary and probably a bit of a headwind to growth. But we'll have to wait and see, actually, which of the competing stories we get this morning and over the next several weeks is actually put into place.
Are you expecting a strong jobs report on Friday, Mike? And how does this all set us up for the next Fed decision in about 3 weeks' time?
Yeah, so we're looking for more of the same, actually. We're looking for 150K, which is kind of what we've been averaging over the past 6 months, and an unemployment rate unchanged at 4.2%. I think if we got that, the Fed would be okay being on hold at the end of the month, which is, pretty much what they've been signaling ever since that December FOMC meeting, if not earlier. Obviously, if we get a surprise to the downside, you'd have to have a pretty big surprise to the downside, but that could change that narrative. I think it's pretty hard to see upside surprises yet getting a narrative of hikes. I think that's a discussion for much later.
Steve, well, yeah, if we start talking about hikes, that would be a whole other market story. But I take your point with what bond yields and the data are doing. You never know. What about, Steve, this news that Barr is going to step down from his supervisory role, I guess stay on the Fed board? And while it may sound kind of wonky or inside baseball, it's true that this is, bank supervision. And perhaps if he foresees an administration that's going to come in and be either letting banks do more M&A, pushing them to do more lending into the economy, that kind of thing. Is there a larger macro takeaway from this?
Well, I think that it's part of the pendulum swinging back from the banks being very much under the thumb of government and regulators to at least some relief. Michael Barr was pretty tough on that. He did back off of some of his most extreme positions when it came to the capital buffers that were out there, as following really where the board was. I think it's really interesting that he's going to keep his position there. It requires the Trump administration to pick from among the existing board members. I wouldn't be surprised, by the way, if Congress takes up that law again and gives the flexibility to the administration to pick its own person. I don't know if they're going to have the votes for that. But, yeah, it's relief for the banks. We'll see how far it goes. I do think there is relatively good bipartisanship agreement on the issue of being relatively strong on the banks, maybe not as strong as we've been.